Hi there. If you're watching this, you're probably looking to quickly improve your credit score, and you have come to the right place. At Credit Duck, we are all about helping you take control of your financial future. I know exactly how overwhelming it can feel when you're stuck in a lower credit score range. Don't panic. I have been there myself. With the right strategies and a little bit of patience, I was able to turn my credit score around, and now I want to help you do the same. First, let's understand what your credit score is made of. It's like a financial report card, and it's made up of five key factors. First up, we have payment history, which makes up the largest portion of your score. That is 35%. This reflects on time payments, late payments, collections, and bankruptcies. Next is credit utilization, which makes up 30% of your score. This measures the ratio of current credit card balances to total credit limits. Then there is the length of credit history. This accounts for 15% of your score. It considers how long credit accounts have been active. Next, we have types of credit, and it takes 10%. This looks at variety of credit accounts, such as credit cards, mortgages, and loans. And finally, new credit, which amounts to 10%. This refers to recent inquiries and newly opened accounts. In case you want to dive deeper into this, check out my video series on FICO versus VantageScore, where I break down the key differences between these two scoring models and how they affect your credit journey. Now that we have covered what makes up your credit score, let's get back to the main topic: how you can start improving your score quickly and effectively. First things first, know where you stand. Check your credit score. It's really easy to do, and there are plenty of free tools available. One of the best places to start is annualcreditreport.com. It's a simple three-step process. Fill out a quick form, choose the reports you want, and request them. Easy, right? Once you have your credit report, here's what to look for. Start by reviewing your personally identifiable information. Things like your name, address, social security number, and any accounts or loans listed. After that, go through the rest of information carefully to make sure everything is accurate and up to date. Believe it or not, errors on the credit reports are more common than you think. They can range from identity mistakes to incorrect amount statuses or simple data entry errors. In fact, according to the Federal Trade Commission, about 1 in 5 consumers has an error on their credit report that could impact their score. If you spot anything wrong, dispute it with the credit bureaus. Think of it like finding a typo in your financial story. You'll want to get that fixed ASAP. And the best part, even little correction could mean more points on your score. That brings us to the second point: become an authorized user. When you're added as an authorized user on someone else's credit card, you get the benefit of their credit history on that account without actually being responsible for making payments. That means their on-time payments, low credit utilization, and good standing all get reported on your credit as well. It's like they're giving your score a boost just by adding you. But there are a couple of things you'll want to know. First, make sure the primary card holder has a good credit history, especially on the account they're adding you to. If they have missed payments or high credit utilization, it could actually hurt your score instead of helping it. Also, check with the credit card issuer to make sure they report authorized user to the credit bureaus. Some do, some don't. You want to make sure your name shows up on the report. A good way to confirm that would be to frequently monitor your credit score. So, becoming an authorized user can be a fast and easy way to boost your score, especially if you don't have a long credit history. Just remember, it's important to pick someone with good credit habits and always double check that they are reporting to the credit bureaus. Alright, we have looked at some great steps so far. But if you're really eager to see your score climb quickly, here's one of the most powerful methods: paying down your balances. So, why does paying down your credit card balances help you with the credit score? It all comes down to something called as credit utilization. This is the ratio of how much credit you're using to how much total credit you have. And credit utilization makes up a whopping 30% of your score. To increase your score, aim to keep your balances under 30% of your limit. But if you want an even faster boost, keeping it under 10% can make a big difference. Let's break it down with an example. Say you have a credit card with a $1,000 limit. Keeping a balance of $300 or less is good, but paying it down to under $100 will really improve your utilization score. Here's how to make that happen fast. First, prioritize your highest interest cards. Paying this down saves you the most money in the long run. Second, consider making payments twice a month. This keeps your balance low and shows the lender you're handling credit responsibly. Let's say you have got a credit limit of $1,000 and your balance each month hits $600. That's 60% of your limit, way higher than what's recommended. But if you pay $300 halfway through the month, your utilization drops to 30%. Pay another $300 at the end of the month, and you've got a much better situation. Third, avoid major purchases that increase your balance and raise your utilization right before applying for a new card. A quick tip: request a higher credit limit. It might sound intimidating, but here's the trick. If you keep your spending the same, a higher limit actually reduces your credit utilization ratio. So go ahead, call up your credit card company, and politely ask for a limit increase. The worst thing they can say is no. Did you know you can boost your credit score just by paying your phone or utility bills on time? Thanks to Experian Boost, those payments can now be factored into your credit score. It's free, easy, and can give you the extra boost you've been looking for. Experian Boost is a free feature offered by Experian that allows consumers to enhance their credit scores by adding positive payment history from their utility, telecom, and streaming services bills. Here's a deeper look into how it works and its benefits. Step 1. Connect your bank accounts. Connect any bank accounts you use to pay your bills. Then, select the bills you want to use. Experian will automatically find bills with a track record of on-time payments, so you can add those to your Experian credit file. Then, see your results instantly. You'll know right away if your FICO score got a boost and by exactly how many points. It's that simple. With just a few steps, you're adding positive payment history to your credit profile and could be on your way to a higher score. One of the best parts about Experian Boost, it's absolutely free. Yep, there is no cost to use it, and it's flexible too. Boost lets you add various types of payments like utility bills, insurance, and even rent to your credit report. Experian Boost can be a valuable tool for those looking to enhance their credit scores without incurring additional debt. It's especially beneficial for individuals with limited credit history or those trying to improve their scores quickly. Here's one you might not expect. Keep those old credit accounts open. According to FICO, the length of your credit history makes up 15% of your score. So the longer your accounts have been open, the better for your credit. Closing old accounts can shorten your credit history, and that could hurt your score. So if that old card isn't costing you anything, just leave it there like an old, reliable nest egg. Credit Duck says, the longer, the better. Downgrade, don't close. Now, if your old card comes with an annual fee, you don't have to keep paying for it. Instead of closing it, consider downgrading to a non-fee version of the card. That way, your credit history stays intact without the extra cost. It's a win-win. And here's another tip. If you must, try to avoid closing multiple accounts at once. When you close multiple accounts, it can have bigger impact on your credit score because it changes your credit utilization rate and can reduce your available credit. So, pace yourself and don't make any drastic moves all at once. Don't be afraid to get a new card if it makes sense for you. But here's the catch: space them out. Opening multiple cards in a short time can hurt your score because of too many inquiries. Each inquiry can temporarily lower your score. So try to only apply for a new card when you really need it, and give it time before applying for another one. Timing is everything. When you apply for too many cards all at once, it can make you look desperate for credit. Lenders aren't fan of this. So space your applications out and show you're not just collecting cards for fun. Patience is your best friend here. Let each new card settle in. And once you see the positive impact, go ahead and consider another one. This way, you're building your score without any sudden drops. Here's something that often gets missed. Your credit score isn't just about credit cards. It also includes other types of loans like auto loans, mortgages, and personal loans. So having a variety of credit types, called your credit mix, can actually help your score. FICO looks at how well you manage a mix of credit, not just your credit cards. It's all about showing you can responsibly handle different types of debt. In fact, your credit mix makes up 10% of your score. If you're only using credit cards, it might help to add a different type of credit to your mix, like an auto loan or personal loan, if it makes sense for you. But don't go taking on debt just to diversify. Only do it if you can manage it. It's about balance. Having a healthy mix of credit types can help boost your score over time. Now, how do you keep track of your progress? Simple. Monitor your score. You can't improve what you're not paying attention to. Check your credit score regularly to see how you're doing, whether it's reducing balances, keeping accounts open, or mixing up your credit types. Tracking your score helps you stay on top of what's working and what needs a little more love. You can access your credit score for free through services like Experian, Credit Karma, or even your credit card provider. Make it a habit to check monthly so you can spot any changes and jump on opportunities to improve. Remember, boosting your credit score takes the right knowledge and consistent effort. Stay on top of it, and those numbers will rise. So, there you have it, guaranteed ways to boost your credit score quickly. Try them out, and you'll be on the path to credit greatness. I have done it myself, and trust me, it works. And hey, I'm here to guide you every step of the way. You've got this. If you enjoyed this video, don't forget to whack that like button and subscribe to stay in the Credit Duck flock. Drop a comment below. What's your top credit boosting tip? Or did I miss any? Let me know. And until next time, stay fly and credit wise.